What's going on, guys? Just throwing together an update video for the weekend. Very solid week all around. Everything looks good. Everything's very bullish. Jumping right into the video, starting with the macro on SPY, which is extremely bullish. Once again, descending broadening wedge, transitioning into an ascending triangle, broke out of both macro patterns to the upside, tested on the descending broadening wedge, found a bounce, and then a break out of the ascending triangle as well. And today, we actually broke through that horizontal channel I was talking about, that 426 to 429 range that we were trading in, this horizontal channel, broke it to the upside. High of the day, 432, came down, tested on the channel, and then closed above. It looks very, very bullish, very, very good. No complaints here whatsoever. Day 51 in a row, closing over the 200 EMA, bullish. Golden cross on the daily, very bullish. This looks very, very good. Jumping into the symmetry on SPY once again. So starting with your blue box, which would be the middle, from there you come into the red, where you have this horizontal line drawn at 380. Both red boxes dip below. Same over here. This one came a little bit lower than this red box over here to retest on the macro, and the blue actually came a little bit higher, breaking over that ascending triangle that we were trading in to retest the macro. So both red boxes come below this horizontal line at 380. From there, you come back up to 418 on the dot, find a rejection there in both. From that rejection at 418, you come down to 380, bounce perfectly off of 380 in both. And then from there, you come up to this 430 resistance here, where you have 3 touches before you break out of it to the upside. And I mentioned in my video yesterday that we were actually on our third touch, and today we broke out of it, retested on it, and closed above. This looks very, very good. Along with closing over the 200 EMA for 50 plus days straight now, the golden cross on the daily, which is extremely bullish on SPY, perfect symmetry, and it looks very good. There's nothing bearish about this chart whatsoever. SPY is going to new highs. It's closer than most people think. I mean, just as far as the symmetry goes in this move, 450 should come relatively fast. I've mentioned this multiple times that once we break this 430 resistance here, 450 to 425 happened in 2 days. So you could probably expect that move is gonna be pretty fast. Maybe, I don't want to go so far as to say we're hitting 450 next week, but it's definitely on the table. With that being said, overhead resistances to look out for: 438, 450, 458, 470, and then from there, that's where you're going to find your highs once we break that resistance at 470. Overall, the market is extremely bullish. SPY is very bullish. Everything looks very, very good. With that being said, jumping into the market sync once again, just showing the breakouts of both macro patterns on SPY over here. The macro breakout of the ascending triangle here, the retest, the bounce, the confirmation of the retest there. At the same time, AMC has broken its macro pattern to the upside, came back down to test on the macro resistance as support, held it as support, and we are now in an uptrend on a bounce off of that previous resistance as support. It's a macro breakout for SPY and a macro breakout for AMC roughly at the exact same time. Once again, just showing the market sync there. So jumping into the macro, which I don't know, whatever, I don't know. Green, red, blue, same shit, different day. It's tracking perfectly, always has been. The only difference being that we're descending. I don't know, I'm gonna stop showing this. I think at this point everyone's seen this. There's no need to really touch on that anymore, especially when I show it here. Doesn't really need bars. You could see it pretty clearly here as well. So this is my macro perspective once again up top. Without the bars, just showing the green, red, and blue versus the green, red, and blue here. And then the blue boxes are underneath them, showing the comparison here. So touched on this multiple times. We already got our first bottom, our tri-peak rejecting resistance here. Our second bottom with a slightly lower low, an uptrend that breaks you out of the macro, the retest, the confirmation of the retest, and then from there is when you squeeze. And that's where we are. First bottom, tri-peak rejecting resistance, second bottom, slightly lower low, uptrend breaks you out of the macro, retest confirmed, and now we're in this uptrend here. Looks very, very good. Very bullish there. So with that being said, I wanted to touch on this. I mentioned it briefly yesterday. I'm just going to mention it briefly again, but I want to show you with the visual here. So on the left, you have the 2021 cycle, which 100. I've mentioned this 100 times. This was flat here the entire time. It's a very flat pattern that played out, and we're tracking it the exact same way. The only difference here being that we're descending. So I have date ranges pulled on each of the boxes here. The green box in the 2021 cycle, 110 days versus 120 in the current, pretty much one-to-one there. The red box, 83 days in the 2021 cycle, 127 days here, slightly slower than one-to-one. It's roughly one-to-one. It's pretty fucking close. And then the blue box, 147 days here, roughly 150 days. And we're on day 308, so twice as slow here. And I mentioned this briefly yesterday, that the ape dividend got dropped in August, pretty much at the start of this blue box, this iteration in the blue that took you to your squeeze in January 2021. When the ape dividend got dropped, we started tracking much slower here. We didn't stop tracking. We're still tracking. It didn't change anything about the macro. We're still tracking perfectly, but it slowed down the algo apparently. Just from what I'm seeing, it's just correlations here. We're still tracking perfectly. It's just slower now compared to the green and the red. Green and the red were pretty much one-to-one. Now we're looking two-to-one. We're tracking slower now. I'm sure it has something to do with the ape dividend. That being said, it didn't change the fact that we're tracking. We're still tracking perfectly. It's just slower now, but we're at the end regardless. So I just wanted to touch on that once again. With that being said, the trend angles, I'm going to keep touching on this because this is pretty crazy. So on the left would be your blue box of January 2021. On the right would be the current cycle. From the top of the blue box in both patterns here, drawing a trend angle down over your tri-peak where you find a rejection, and then all the way down to where you find your breakout and the retest. Same exact thing over here, rejected off the tri-peak. There's your breakout and your retest. Minus 42 degrees on both sides. Exact same trend angle. It's identical. And then on the bottom, low to low, the lower low to the first low in the 2021 cycle, 176 degrees here versus 178 degrees here, low to low. So the trend angles are identical. The movement is identical. We got our breakout. We got our retest. We confirmed the retest, and now we're in this uptrend. This looks very, very good. Very bullish. Once again, jumping into the breakout now. So this white line would be our macro resistance, the macro resistance on AMC. And the red line would be the micro resistance that kept us pinched down into a descending wedge on the test of the macro. So I mentioned this before too, where you reject off the macro here, form this W that breaks you out, you get the rest of the upside. From the top of the breakout, we spent a month in this retest. So testing on the macro here, rejecting the micro. I mentioned this micro pinched us down into a descending wedge, holding us to our retest of the macro. Broke below the macro a few times actually here before reclaiming it. Flat there, reject the micro multiple times here, come back down, reject the micro again, bounce off the macro, bounce off the macro again, reject the micro, bounce off the macro, bounce off the macro, and then we finally found that uptrend where you break out of this descending wedge, confirm the retest, break out of the descending wedge, retest on the micro resistance, hold it as support, and then we found this uptrend. A very, very solid uptrend that we have going on now. This is the macro breakout on AMC. Very, very important here. This is taking us to our squeeze. So this is the macro breakout on AMC here, right here, and then the retest that we spent a month in. 4 weeks in this retest. Craziness. Very, very slow, very low volume barcodey, but we held up on the retest. We confirmed the retest, and now we found an uptrend off of it. So this is going to be taking us to our squeeze. This looks very, very bullish. Once again, the daily showing the breakout. So this would be your blue box here, where you have your trend line running from the start of the blue box down over the tri-peak where you get rejected right here, down to your breakout and retest. This looks fucking crazy. Legitimately, this looks insane. From this breakout here, and you could see look at how long this took. Like, how many candles here with such a low, small range on a daily basis. Very low volume barcode here. Found a bounce there. That would be your first leg of the W. Found a bounce there, your second leg of the W, and your confirmation of the retest. And then this uptrend off of the macro resistance which held as support. That's a confirmation of a retest there. This looks very, very good as well. Very, very bullish here. Now, 10 minutes in, I'm going to try to keep this quick. So with that being said, I'm going to get into the micro now, which is tracking fucking perfectly. It looks really, really good. Seriously, it looks amazing. But I'll start with this just so everyone's following. Up top, once again, is my macro perspective. The green, red, and blue box here that led up to the squeeze in January. From January, you come back down, which leads to the June squeeze. From June, you trade in this flag. You have this flag here that you break down from and reset back into the green, red, and blue. So we're playing out the green, red, and blue again. Same exact thing that we saw back here, except in a descending fashion. So with that being said, zooming into the blue boxes on both sides now, I've touched on this a billion times. From the start of the blue box, drawing a trend line down over the tri-peak where you get rejected, you find your breakout and your retest. Before that, you have your first low, your tri-peak, your second low, slightly lower, and then an uptrend that breaks you out. And that you break out there and then you retest. Over here, exact same thing. Your first low, your tri-peak, which rejects that resistance line drawn from the start of the blue box. You come back down to a slightly lower low, and then you find this uptrend that breaks you out, and then you retest. The trend angles, I've already showed this in this video, the trend angles are identical, same thing, minus 42 degrees on both sides, and then the bottom, low to low, 176 degrees versus 178. The trend angles are identical, the movement is identical. With that being said, on the macro, this is where we are. We broke out, we got the retest, we confirmed the retest. This is where we are. Now zoomed in right here on the micro, there's an uptrend that forms before you get these boom candles here. So that would be where we are, where we got our first bottom there, the second bottom there, and then we have this uptrend where you confirm the retest. Zooming in on the micro now to the retest, it's legitimately tracking perfectly. So on the left would be January 22nd, 2021, what I just showed you in the last slide. And then on the right would be our current cycle, which is tracking perfectly. It's just a lot slower. Much slower. This is a 1 minute chart versus a 4 hour chart. This played out in 1 hour. From what I'm showing you here is 1 hour of trading, roughly, or maybe 2 hours, 10:30 to 1, 2.5 hours roughly, versus over a month on this side. So it is tracking perfectly. It's tracking much slower though. So starting with the yellow box here, which is where you find your top, as you can see there, is the same exact thing you see here. From that, you break down into this orange box here, which is more or less a W. Your first low being higher than the second low here. Same exact thing that you see here. And I have horizontal lines drawn across to help you see the movement better, which it pretty much tracked perfectly the entire time. So from that second low, the lower low, you bounce up to this red horizontal line, reject that, and then come all the way down to your bottom, as we did here. Reject that, come all the way down to your bottom. And then from that bottom, this is the confirmation of the retest, as shown here. You find a bounce up, and then you have this red box here, very barcodey sideways here in this range. Exact same thing that we saw here. From the confirmation, you come up, and you're very barcodey sideways in this range. Right, and then I have this white horizontal line drawn across, which would be the top of that, which is the top of this, same here. And on the top of that white horizontal line, so before you come down to confirm the retest here, you have this movement over here where the top of the green box, you reject off of that, which is exactly what we have here. This rejection here off the top of the green box now brings you down to the confirmation. Then from there, you bounce up and you're sideways here, barcodey flat, as we were here. From that, you break out of that and come back up to the top of the green box, marked by these blue boxes that I'm showing here. Same thing over here. I mentioned in my last video, the wicks are never going to be perfect, especially on the micro level. You have a better chance of seeing like perfect movement on a macro. On the micro, never going to be perfect, especially when you're comparing a 1 minute chart to a 4 hour chart. Never going to be perfect, but it is tracking perfectly. It's the same movement. So from that breakout of the red rectangle, same there, you come back up to the top of the green box as we did. From there, you have a double bottom marked by the purple circles now, same over here. And that double bottom bottoms at the bottom of the red box here, the red rectangle. Same thing over here. So there would be your first low, your second low. From that second low, you've bounced back up, reject off the top of the green again, retrace one more time before you break out of it. Exactly what happened here. So from that double bottom here, you come back up, hit the top of the green, reject, retrace. It's actually a higher low there, which is what we got. And then from there, you break out of this range. And I mentioned this in my video yesterday as well. If this red horizontal line here is correct, which I'm pretty sure it is, we can be expecting a move to $5 on Monday. I am expecting this move on Monday to $5. I am expecting AMC to cross the $5 range on Monday. If this horizontal line is correct, I'm pretty sure it is. So Monday, we should break out of this green box here, this range. We should break out of that. Potentially, 508 would be where I have this horizontal line. Potentially, that's where you're going to find your high. It doesn't have to be 508. It could be slightly lower. It could be 490. It could be 520. It doesn't have to be the exact same. I'm just basing this off of touch points, which are pretty much identical so far. So this is the rest of the movement, and I'm assuming that this is going to play out all next week. This would be your movement all next week. This is what next week is going to look like, in my opinion. Potentially next Friday, you start getting these boom candles. I'm going to be touching on this on a daily basis next week, just going over the tracking on the micro. But I am expecting to hit $5 next week. 100%. I'm almost 100% certain we're hitting $5 next week. So that's pretty much that. I mentioned multiple times that this retest is going to take a very long time. And the uptrend back up to the double top is going to take a very long time. So, fractally speaking, once again, what we have left, since we confirmed our retest, I'll show it with this one instead. Fractally speaking, what we have, since we got all of this movement, I touched on this multiple times already in this video, we got our breakout and the retest. We confirmed the retest, and then we found an uptrend. This is where we are, showing on both sides where we are. Fractally speaking, what we have left is a double top, slightly higher than the top that we saw in the breakout. So the top on the breakout was 620. I'm expecting to find a double top somewhere around the $6.50 to $7 range, which I mentioned multiple times is going to take some time. I said potentially 2 or 3 weeks. We're now 1 week in. This whole week we were in an uptrend. That's 1 full week now. Potentially this is going to take 2 or 3 weeks to get back up to this double top. I'm expecting to be at $6.50, $7 within another week or two. So fractally speaking, what we have left is this double top here, $6.50 to $7, which in my opinion is going to take another week or two. From there, you gap up, you get the fractal break, the macro fractal break. That takes you to the top of the tri-peak, which would be $8 to $10. And from there, you have a straight line into your squeeze. That's what we have left. So it looks very good. Everything looks bullish. I mentioned multiple times that in the previous 2 squeezes that we saw on AMC, SPY was rallying to the upside, and that's what it's doing. SPY looks very, very good. I have absolutely no complaints. Everything looks very bullish. That being said, I want to touch on a couple things before I end the video. A couple of recurring comments that I see that are just starting to get annoying at this point. The first one being, TA doesn't matter. AMC is a highly manipulated stock, so TA doesn't matter. No shit. Like, I'm showing you, my TA is showing you how it's manipulated. I'm literally showing you how it's manipulated. I mentioned this since I made my channel, my very first video, that there's no supply and demand in the stock market at all. The stock market is traded on, it's computerized and traded by algorithms, and those algorithms literally do what they want with the stock price. They run the stock how it wants to run the stock. Elon Musk could drop $1 billion in the AMC and we would be flat. I've said that multiple times as well. There's no supply and demand. So the stock is manipulated. I'm showing you how. That's what my TA is. We're literally running on a fucking loop. Right here, this straight line right here, this flatness, right here before you drop down into the segment that takes you to your squeeze. This is when COVID got the CDC announced COVID. This is like January 2020 right here. So from that, you drop down into this 3 fractal sequence here that takes you to your squeeze. From there, you come back down, squeeze again in June, and then you have this flag that you break down from, and then you reset back into this. It's running on a loop. So yes, the stock is manipulated. I'm showing you how it's manipulated. Your buy and sell orders on AMC do not affect the stock price at all. So with that being said, the only thing that you can do is TA, because it's running on a fucking loop. So it looks very good. I don't know where I'm going with this. The point being that yes, the stock is manipulated. My TA is showing you how. The algorithm is running this on a fucking loop. Another thing being the reverse split. Everyone is so terrified of the reverse split. I don't know why. Every move that you see in the market, volatile move to the upside or downside, there's always some sort of justification for it. News, whatever. You know, I fucking hate the news. But there's always some kind of news that justifies the move. But the move can be predicted with TA. You could pretty much predict the news. This is something that I've come to learn. Point being right here, actually, that this would be January 15th, 2021. And this was the beginning of April. I was calling for a knife here, and we closed right here, tracked perfectly. The touch points in this is perfect. This is January 15th, 2021 versus that knife that we got after hours. So this knife was predicted, and you could have predicted the news here. Like I was saying, we're gonna knife, and then we knifed, and then it was after hours, and that AK dropped, and that was the reason, the justification for the knife. Really, we were gonna knife no matter what. It was the pattern finished playing out. The algorithm was ready to knife. We knife. AK drops coincidentally. And that's the reason for the knife. That wasn't the reason for the knife. The reason for the knife was the algorithm finished playing this pattern out, and that's what was coming next, was the knife. So another thing there, point being that every move that you see in the market, volatile to the upside or downside, is going to have some justification, some kind of news, some kind of catalyst. The reverse split, and I've said this literally since I made my channel, that the reverse split is our catalyst. That is the catalyst for our squeeze. There has to be some kind of catalyst. I don't know. It's not going to be fucking popcorn sales, I'll tell you that. So the reverse split, in my opinion, is our catalyst for our squeeze. I've said that over and over again throughout the course of me being on YouTube. So that's one other thing I wanted to mention. And I don't even know where I'm going with this anymore. I'm just rambling at this point. But everything looks fucking amazing. The macro is perfect, always has been, playing out exactly the same way it did back here, except descending. SPY is rallying to the upside, and I mentioned multiple times, January and June squeeze on AMC, SPY was rallying to the upside. I showed the pattern that SPY played prior to squeezing in January is the exact same one that is playing now. You have that channel that I mentioned multiple times. Every time you break below the channel, you reclaim the channel. Everything looks fucking good. And now we have this uptrend going, which it looks so good. Seriously. That is a confirmation of a retest there and the uptrend. This is playing out exactly how I've been saying it's going to play out for the past couple weeks, where we would be in this retest. The retest is descending. Once we confirm the retest, we're going to have a very slow climb back up to a double top. So that's pretty much the video. I'm expecting 5+ next week. Depending on how fast this plays out, I'm assuming it's going to take time, another week or two before we get that double top. But we are going to be going to $6.50, $7 within the next week or two. So more than likely it won't be next week. Next week will probably be in the 5s, maybe low to mid 5s. The following week will be our double top, $6.50 to $7, more than likely in my opinion. And then from there is the squeeze. And something I mentioned as well, the OPEC states cannot be ignored. The next OPEC date that we have is actually June 28th. It's not the 27th, it's the 28th. There's a holiday on Monday, June 19th, Juneteenth. So that would land 7 trading days post OPEC on a Wednesday, like the previous 2 squeezes did. I don't really see this making it to July. It wouldn't make sense just based off the macro. Getting to July wouldn't make sense. You're talking about a month in an uptrend from 470 to 650, which no way. So it looks like June is our time. Looks like the end of this month is our time. I'll keep updating on a daily basis, but it looks very, very good for the end of this month. So that being said, that's the video. I don't know why I'm still talking. So hope everyone enjoys their weekend, and I'll catch you guys next week.